Good morning, folks. You're tuned into Moneycontrol on this live stream. You're watching Opening Bell with me, Stacy Pereira. And as usual, I'm here to take you through all the news and cues that you need to be looking out for in your trading day and what could turn out to be perhaps a volatile trading day is what we are seeing for the past couple of sessions at least, where the markets have gotten into this consolidation mode of sorts. But can we really lift up from here, and what would be that trigger? That's what we're going to be discussing on the show with my guests. But before we get to them, let's see what are the other news that are making headlines. Now, stocks on Wall Street did rise despite that higher than expected February inflation print. The CPI in US rose to about 3.2%, higher than the forecast of 3.1%, further clouding those outlooks on whether a rate cut by the Fed could come anytime soon. And Asian markets give up those early gains in trade after trading mixed after that strong start following gains on Wall Street. The GIFT Nifty, though, is indicating a slightly higher start for the Indian markets. And looking at the commodity front, where Brent crude remains range-bound around that $82 per barrel mark following inflation data in the United States, the OPEC has gone on and said that it has maintained its forecast of demand rising by 2.2 million barrels a day. Now, gold, however, retreats from those record high levels after US CPI comes higher than expected. And if you look at the domestic retail inflation, that one remains steady in February, coming in at just over 5%. Even as food prices have accelerated, the core inflation cools to about 3.3%, whereas industrial output in the month of January also remains steady at 3.8%. And British American Tobacco, the long-term strategic investor in ITC, will go on to sell 3.5% stake through a block deals. The sale is likely to fetch BAT over 16,700 crore rupees and will continue to hold about a 25.5% stake in ITC even post this sale. So interesting cues to be looking out for, but let me also give you a trade setup of what the F&O market is really looking like. And if you look at the Nifty put call ratio, well, that one is indicating the mood of the equity markets, and that rose by about just 0.95 versus the 0.94 that it saw in the previous session. And remember, below 1 PCR, like what it is at 0.95, really indicates that the trading volumes are now more towards the call option, of call options is more than what is of put options, which is generally suggesting a bullish market, we could say, that trend going ahead. But for the stocks that are in the F&O band, about 9 of them in the F&O band for March 13th, and these include National Aluminium Company or NALCO, Piramal Enterprise. These two have been added to the ban list, whereas the stocks which continue to be in the ban or retain are Aditya Birla Fashion and Retail, Hindustan Copper, Manappuram Finance, Mahanagar Gas, SAIL, Tata Chemicals, as well as Z Enterprise. So total of 9 stocks there that will continue to trade in the cash market but not in the F&O. Whereas you look at the fund flows that have been coming in, and we've been seeing good traction coming in from foreign institutional investors, although yesterday was not that day, and we just saw a bare minimum net buying from FIIs somewhere to the tune of 73.12 crore rupees, whereas it was the domestic institutional investors that did that heavy lifting yesterday, buying shares worth 2,358.18 crore rupees on March 12. This is the provisional data that NSE really pulls out. So we will see how that really transpires over time. But today what we're actually going to be focusing more on is the sell-off that we are seeing, at least in the small caps. Now, they have been the ones that have, tried to build some kind of momentum. And there has been news flow that has not been so positive, especially with warning signals coming in from SEBI, warning even mutual fund companies, telling them to take a step back, rebalance portfolios, and all of that having its implications on how people are looking at their portfolio and rebalancing. So we will get to what's really causing this stress for small caps and whether this is likely to continue even further. But we're also going to discuss a couple of other stocks that will be in news now. One of them, like I said, being ITC. Now, we were the first ones to tell you that, there is news around ITC, and it's a holding company, one would say. Not really holding company, but a bigger portion, about 29% stake is what British American Tobacco had in the company in ITC. But now they are looking for an opportunity to pare that stake, and they will be looking to sell about 3.5% of equity stake, and this mostly through block deals is what we're given to understand. Remember, the British cigarette maker's India unit, which plans to sell somewhere close to 43.69 crore ITC shares. So that's the number that you've got. And if you look at, this whole accelerated book is what they're going to be selling it through this via, and somewhere the floor price for this at 384 to 400. And this, if you look at where the stock closed yesterday, it definitely came under pressure because there was already buzz saying that there is this stake sale talk that is happening. And we saw, if you have to take that counter versus yesterday, this will be somewhere of a 5% discount to what the stock price closed at. Now, post this stake sale, ITC is a single largest stakeholder, which has been, British American Tobacco for the longest time. That stake, like I told you, which was at 29%, will come down to just about 25.5%. So it will be interesting to see how this really transpires. The stock did come under some bit of pressure. It has been that meme stock. But let's discuss all of this and how one should really be looking at ITC. And to join me for that is Rajesh Palviya from Axis Securities. Good morning, Rajesh. Thanks so much for speaking with us here at Moneycontrol. I was just giving a little bit to our viewers about what's happening with ITC, and that would be one stock in focus. Take us through, firstly, where you're looking at the charts when it comes to the indices, because there has been some bit of consolidation in the past 1-2 days after that rally. So first, take us through the cues or the chart, what it's indicating for the Nifty as well as Bank Nifty, and then we'll get to some stock-specific action as well.
Good morning, Stacy. So market is choppy. Broader market is showing a different behavior, but index is showing a different behavior. So Nifty, Bank Nifty still, if we look at the compared to broader market, it's in a different behavior mode. Still, we are holding the major support area of Nifty at around 22,200. So that's the major put-based concentration for this weekly 14th March weekly expiry of option. Even on the monthly data setup also, 22,000, 22,200 is attracting more put writing activity. But on the higher side, 22,400, 500 are the major supply zone based on the call concentration area. So until Nifty not crosses about 22,400, 22,450 kind of zone on a closing basis, short covering is likely to be absent in the market for some more couple of trading sessions. Once we able to take out those levels, then yes, definitely we are going to have a short covering, and then possibly again Nifty may inch up to the new all-time high trajectory. But looking at the broader market, it seems to be a little tough in these kind of scenario, as the mid cap, small caps are showing major supply pressure and profit taking activity. On the Bank Nifty, the immediate and critical support area is placed at around 47,100. So if we break those levels, then possible a downside we can see towards 46,800, 46,700 also on the downside. On the higher side, the major call concentration area where the major writing activities witnessed in the previous session is around 47,500, 47,700. So these two levels are important for today's session. If we able to cross 47,700, then we may see some short covering action. But still, if we analyze the most of the constituent of Bank Nifty, still they are in supply pressure. Most of the PSU bank have witnessed supply pressure in previous session. Even the private bank, only HDFC was the major contributor to some uptick in Bank Nifty, but rest other stocks are still in the consolidation. So 47,700 is the key level for Bank Nifty on the higher side, and 47,100 is the key level on the downside for Bank Nifty for today's session.
Right, interesting. Then we'll be talking in detail about how the Bank Nifty has seen quite some swings. Like within intraday, it sees somewhere around 900 points of highs and lows. So that is something to be watching out for. But another index that is quite in focus is that of the small cap. Now, there has been quite a bit of noise around what's happening with small caps, and we've been seeing consistent selling pressure, one would say. Just in the past, about 86% of that small cap stocks have seen, in the past 3 weeks have seen selling, one would really say. But let's discuss that, and joining me for that to give us more perspective is also Andrew Holland. He's the CEO at Avendus Capital. Good morning, Andrew. Thanks so much for speaking with us here at Moneycontrol. Let me get this question first straight out, because we've been seeing this kind of selling or stress selling, one would say, within the small cap space, and much because of the news that has been coming out, the regulator also stepping in, talking about manipulation that is likely, and they're searching for evidence as well when it comes to the SME IPOs part of it. But we are seeing consistent, rotation, one would say. Or now, is this the right time to be, rebalancing the portfolio, like what SEBI really wants us to do?
Well, it depends on your longer term horizon, right? I mean, I think, yes, so on the way up, all small caps moved up, right? And that's, and you even get in the large caps as well. It drags, some of the underperformers a lot higher than they probably should do. So nothing wrong with a correction. And I think this is the time when, if you have high conviction in either a small cap or a mid cap in the sector that they're in, and let's just take one sector, which is a theme that we think will play out over many years, which is electronic manufacturing sector. Those companies, the share price might be under pressure in the short term, but over the long term, these are the days when you kind of look back and say, these are the times I should be buying into these good companies, because it's a market factor, not a fundamental change in the company. And that's when you get nervous. It's a fundamental change in the company which should lead you to sell. Interest rates are coming down. And we all know the kind of growth story in India. This is a domestic-driven story for India, and therefore small and mid caps should be able to play into that. So stick to the theme, stick to the companies you like, and they'll reward you over a longer period. So, the shifting around from large cap to mid cap, you should also have, your own kind of balance in terms of your 100 rupees. Where would you place it now? Would it be more large cap, mid cap, small cap? And I think a lot of investors are doing this through SIPs, and that's a good way of buying at the top, at the middle, and at the bottom as well.
Right. Andrew and Rajesh, do stay on with us, because like Andrew was talking about SIPs, well, an interesting development has taken place, and this through ICICI Prudential, which has gone on to halt any kind of fresh subscription via lump sum mode from March 14, that is tomorrow. Now, this temporary suspension will be in their mid cap as well as small cap portfolios, which are they say have relatively outperformed, and which is why their valuations have turned quite relatively higher. And that's a reason that they've given for this temporary suspension that they'll see in those two mid cap as well as small cap funds. Whereas a fresh SIP and STPs will be allowed for up to 2 lakh per PAN. So that is the one exception they've made. But that is going to be an interesting development to see, and perhaps ICICI Prudential will see some bit of action coming in there on the stock after this news came out yesterday. So it will be interesting, and perhaps this also coming in the same, take these steps being taken by somebody like an ICICI Prudential, which is among the bigger asset management companies, because that's the directive that SEBI really wants us to take a step back, look at the portfolio, and like even our guests have been pointing out, maybe you'll have to pick and choose in this kind of market, and that's exactly what we're going to see. But right there on your screens, markets have opened a little bit in that positive territory, we could say. It was expected on the higher side after the handover that we saw. Even the Nasdaq was up about 1% in trade over overnight. So the Nifty also pretty much reacting to that and almost touching those 22,400 levels, one would say 0.2% higher. The Sensex too also seeing some good bit of traction, about 250 odd points is gaining just on opening bell. So that gap up there for the Sensex at least. If you look at the Bank Nifty, that one too seeing a good 120 points on that opening bell. So all of these sectoral indices, also the mid cap ones, now that's where we said that the worry area would be mid and small cap, but those are the ones that are really holding out. At least we see that at the start of trade, and then it is through the through the trading day that we see some bit of underperformance, or rather not really matching up to the benchmarks, is where the broader markets then see some bit of pressure. But among the sectoral fronts, we're also seeing some pressure coming in there for the metal pack, whereas the IT pack getting some bit of boost, 0.6%. They're higher, 250 points there for the Nifty IT. This after there is some bit of, even though there was the CPI number in the US coming higher than expected, that rate cut trajectory, or when and how soon can that come, that is something that is playing up. But the pharma pack is well in the positive. In fact, pharma has been seeing a good traction. We'll be discussing a couple of those stocks that look quite interesting in the pharma pack. FMCG too, there I think pretty much that's the one that is pushing the markets higher. FMCG index, they're up more than 1% right at opening bell, whereas the auto counters coming under some bit of pressure. But let's look at which are the stocks that are really contributing to the gains. On your screens now, you'll see the gainers and losers, and their ITC among the big gainers. This after that news about British American Tobacco really selling that stake sale. It did see some bit of negative pressure yesterday, but today I think markets are giving it a thumbs up. We've seen brokerages have also come out and given it a thumbs up on ITC, whereas Wipro, TCS, your other IT names, they're making it to the top gainers list. HCL Tech, HDFC Bank, surprisingly yesterday also one of the bigger contributors was HDFC Bank, whereas SBI, the banking pack also trying to make its way there in the gainers list. Cipla, Infosys and Eicher Motor, your other top gainers. Let's also look at the flip side and the laggards in today's session, where we are seeing Power Grid. Now, Power Grid, NTPC, both of those names have seen some bit of pressure. Bharti Airtel also coming in among your losers. Coal India, that stock has seen some bit of good correction. That could be something that you could look at to buy on dips, perhaps. That's the strategy if you want to use for Coal India. HUL as well as ONGC among your laggards in trade right now. Ultratech Cement, Sun Pharma and M&M also making it to that list. But let's see how this really transpires through the trading session. Let me bring back Rajesh now and ask him whether these levels are something that he was expecting, and how should one really be using, what is the strategy one should be using at this point?
So Stacy, gap up opening is there, and major contributor is ITC for this gap up opening, and some buying interest in some of the large cap space. But still, we believe that until Nifty not crosses 22,450 on spot, still we may attract supply pressure for this pullback. So 22,450 level is the key level now for intraday trading perspective. Till that level is not crossed by Nifty spot, still one needs to be cautious for this pullback, because still major call concentration area is not showing any kind of covering post this gap up opening. Also, even for Bank Nifty, the major supply zone that is at 500, that needs to watch. If at all we crosses those level in next 10-15 minutes, then some short covering we can see in Bank Nifty. So 47,500 needs to watch after this gap up opening for Bank Nifty also. That's the critical level post this opening.
Right. Andrew, let me come to you now and ask you about IT stocks. Now, we are seeing a lot of them in the gainers list today, and we've seen, if you have to look at the CPI numbers in the US, those did come higher than expected. Although the stance on how the Fed would react to this and how would that then have some trickle down effect, and how soon that rate cut could come in the US will definitely have some bearing, at least on our IT stocks. So how do you really see the IT play at this point? It has been an underperformer in terms of even the earnings growth. So is IT a good bet right now?
So a few things on that, Stacy. One is, even though the CPI figures were higher than market expectations, what we're seeing these days is that as long as it's not too bad, then it's seen as good news. So again, no one's moving away from the June interest rate reduction for the Federal Reserve, and of course that's the real kicker for the technology stocks, and that's what we've been seeing anyway. So the tailwinds are there for our IT companies now. Now the question is this: is the earnings problem in terms of the growth slowing over? Of course not. It's going to take many quarters, but the market will look ahead of this and say if interest rates are coming down, the tech companies in the US are going to do well or continue to do well. This will be a tailwind for our IT companies. So I think, dipping in the IT now is probably if you take a view that interest rates are falling both here and in the US, in June thereon, then, the IT sector is probably a sector which anyway everyone knows the bad news, and it's probably been priced in. So a good time to be kind of picking at the IT sector.
Right, so good time would be now for the IT sector. Let's also talk about a couple of other stocks that could be a buzz, one of them being Vedanta. Now this because SEBI has asked Vedanta India to pay up to Kane UK Holdings, or CUHL, that's the parent company there, about 77.62 crore rupees, this as delayed payment of dividends. The company has asked to pay also above that an 18% interest per annum to CUHL. The regulators has asked the top management, in fact a couple of those big names there among the management, to refrain from assessing any securities market for the next 2 months, whereas a couple of them also have been asked to stay away for about a month. The company has gone on to say that this SEBI order might not have any major financial impact on the company, but the counter there you can see some bit of pressure that it's witnessing in trade. But let's talk about the metals pack in general. Now that one has been seeing some bit of swings of late when they see some kind of positive news from China. But we've been seeing, stocks like Tata Steel, JSW, all of them see some good rally up in the couple of previous sessions. So maybe Rajesh could give us some of the picks from the metal pack that he would like at this point, and how should one be looking at the metal sector as a whole?
So after really again, some profit taking is happening in most of the metal stocks. So most of the metal stocks are now correcting since last couple of trading session. Looking at the near-term structure, some pressure is likely to be there. But again, most of the stocks are now trading near to their important support area for near-term trend. So from metal space, we like JSW Steel at this moment in this corrective move. Stock is now approaching to its multiple support area of 800 to 790. That's the important level for this corrective move. If stocks hold 790 level, then I think again buying interest will come in this counter, and then possibly we can see a pullback action towards 830, 840 for trading perspective. So I think one can look to buy this stock in this decline with stop loss of 790. Another stock that we like from metal space, that is Tata Steel. We have seen very strong rally in last couple of weeks, but now stock is showing some bit of corrective move, but still the stock is holding its previous breakout level. So till Tata Steel is holding above 145, 146 level, I think this decline should be used as a buying opportunity in Tata Steel with stop loss of 142. And on the higher side, once stock manages to cross above 155, 156 zone, then possible upside we can see towards 165 to 170 also in Tata Steel.
Right, so Tata Steel use the dip as a buying opportunity is what Rajesh says. Andrew, back to you, but give us a picture of, we're a few days away from actually having those dates announced for the elections, and what really happens with PSU stocks in this run-up that we've seen previously, even be it just the interim budget, we saw that good rally, whether it was PSU banking stocks or just PSUs in general and the different sectors. So what would be your assessment of how should one be playing the PSU game at this point?
So if we take some of the sectors like, defense, railways, renewable energy, these are where the government's going to be spending. So of course, you're going to see, a lot of these PSU companies within those sectors. So I think those are good long-term, companies to have in your portfolio, given the growth potential across those sectors. In terms of the banking sector, though, I think there's a shift now more towards the private banks, and I think that's really to do with the RBI interventions in for NBFCs, and NIMs are still under pressure. So I think the switch now is more towards the private banks because they've been underperforming, and the PSU banks themselves can't run away from the kind of NIM pressure that you're seeing. So I think that's the switch that we've been looking at and been making over the past few weeks is more towards the private banks and the PSUs.
In fact, you're talking about PSUs, and if you look at today's losers list, there is Power Grid, NTPC, ONGC, Coal India, all of those making it to the laggard list, in fact, today. But let me bring on Rajesh once again and get a sense from him of, how should one be looking at OMC stocks. Now, those also have been something that have seen a good bit of swings, we would say, in this whole run up to the elections. There is news coming in when it comes to LPG and other, cylinders that the government has gone on to continue those schemes. But are we likely to see some bit of action even when it comes to OMC stocks? Because, of course, fuel prices have remained quite, standardized for some time now.
So I think since last couple of weeks, supply pressure is there in most of the OMC stocks. Most of the stocks are showing some bit of corrective move. Be it BPCL, HPCL, IOC, all three stocks have slipped below to their 20-day moving average. So near-term trend is showing, some pressure is there in the stock. Looking at the near-term structure, we believe that, if BPCL or HPCL, breaks another, if show some more, downtick from current level of another 1 or 2%, then possibly we can see a breakdown on the near-term setup, and then possibly we can see further more pressure in the prices. For BPCL, the immediate important support area is placed at around 605. That's the important level to watch for. If it breaks below 605, then we may see further more supply pressure towards 580 or 570 kind of zone. On the higher side, the major resistance or challenging level for near-term setup is around 645. Until this stock not crosses above 645, we may see further more pressure to there in the stock. On the HPCL, Hind Petro is trading near to its important support area of 500. That's the crucial level for this corrective move. If it breaks below 500, then possible down move can continue towards 480 to 470 kind of zone on the near-term basis. On the higher side, 525 is the key supply zone at this moment.
Let me come back to you and ask you about, maybe we shift a little bit focus from equities and also look at other asset classes. And by this, I'm trying to talk about gold, which is seeing some really new highs in the past whole week. We've seen some good rally coming in there, although today it has retreated after the inflation news that came in overnight. But what would be your take? Of course, we need to have, one would say, a diversified portfolio. But what is your take on gold? And also come in here a little bit on Bitcoins, because that is an interesting rally that we've been seeing, in the past week also. So how would you be looking at these other asset classes?
Is that to me, Stacy?
Yes,
Sorry.
Andrew, that was to you.
Right. Yeah, I'm not a gold expert, but obviously it has been doing very well, and you would expect that to happen, given the kind of uncertainties that you still see in the US, whether it's going to be a hard landing, no landing, or soft landing. So I think there's a move to those assets. Bitcoin is something I know a little bit more about. So you've seen a very, very strong rally from the lows. And I'm sure the experts now will be saying that $100,000 for Bitcoin is on the way, and that's been there for many, many years, right? So, but I think the momentum is there, the ETFs are there, so it's getting more credence now, and the volatility is a lot less than it used to be. So it's becoming an asset class which I think people are starting to take more seriously now. I know regulators around the world have different views, but the market's saying that that there's more stability than we've seen in the past, and you could see some further upward moves in Bitcoin especially.
Right. Andrew, also your view on the IPOs that we are seeing, so much action in the primary markets. What would be your take? There is a word of caution also coming in there from the regulator as well. But we've been seeing a slew of IPOs all through 2024. So how should one be playing that game?
So yeah, I think, each of those IPOs which you come into the market, you have to look at, first of all, the valuations, the sector that they're in, the positioning, and what the expectations are going forward, who's selling the shares, is it the promoters or is it a private equity fund? Is it, the company just raising money? And those are kind of things that I look to in terms of, determining whether I want to be involved in that company, not just for the IPO, but thereafter. So I think, again, it really falls into the valuations that you're looking at and the sector that they're in. But, it's difficult just to kind of take the same brush and tar everyone with the same problems that IPOs are being manipulated. I don't think that would be the case in every one either. So I think you just have to look at the fundamentals. If you're happy with the fundamentals, you should apply.
Right. So interesting. Maybe it's a stock picking market even when it comes to the primary market. Rajesh, quickly before we let you go, the picks that you have for our viewers today and for today's session and also maybe perhaps the week, what would you be suggesting?
So, Stacy, first stock that I like is HEG. After a long consolidation, stock managed to give breakout of this consolidation range, and a very strong buying action is taking place since last trading session. Looking at the overall structure, we believe that this momentum can extend further. So one can look to buy HEG for upside target of 1850 to 1880 kind of zone. Keep your stop loss at around 1755. The second stock that we are on the short side, that is, Canara Bank. We believe that, furthermore pressure is likely to be there in PSU space. So especially Canara Bank is looking weak. Stock now slipped below to its 50-day moving average. This is the fourth consecutive day where stock is making lower high-low formation. That clearly shows there is a sustained supply pressure is there. So we expect that Canara Bank can go down further towards 545. So one can look to sell this stock with stop loss of 576. And the third stock that we like at this moment, that is Bharti Airtel. Bharti Airtel, though some pressure is there after opening, but still if we analyze the overall structure for Bharti Airtel, stock is almost trading near to its all-time high trajectory. Despite of this volatility, stock is showing some bit of comfortable behavior in terms of price action. So I think Bharti Airtel is one stock where we are focusing at this moment. One can look to buy this stock, stop loss of 1180. Upside target we are expecting towards 1230 to 1240.
Interesting call. Says sell on Canara Bank and a buy on Bharti Airtel from Rajesh Palviya for today's trading session. Thanks so much, Rajesh, for speaking with us and giving us your time. Let me quickly squeeze in one more question with Andrew for that matter, and I'm going to take his views on the pharma sector this time around, because we've been seeing, that one lending a lot of support to the benchmarks, one would say, but it has seen its time of underperformance as well. So what would be your take on the pharma pack at this point?
Again, Stacey, I think you have to be very selective in the pharma pack. There's no fundamental reason to own all of the sector. I think there's better growth stories around at this point in time. It's a nice place to hide when markets are a little bit more volatile. But again, I worry again about all the kind of inspections and the problems that pharma companies have from time to time. So it's not a sector which you can really kind of say, it's one I want to own in the very short term. Selectively, yes, but I think there's better stories around which would give you a lot more kind of upside in the very short to medium term.
Well, interesting there. So pharma maybe not so much like for Andrew, but thank you so much, Andrew Holland there from Avendus Capital, speaking with us this morning. Look forward to catching up with you sometime soon as well. Well, talking about pharma and chemical space, one that will be hitting the primary markets is JG Chemicals. That one is set to list today with the equity shares both on the BSE and NSE, and the final issue price for that was set at somewhere around 221 rupees per share. Remember, the JG Chemicals is a leading zinc oxide manufacturer, and that's what the company really does. So we'll be looking forward to how it goes on to list. The grey market showing some bit of muted start rather for this stock, and that's what we've been seeing in the primary markets in the past 2 sessions as well. Nobody really getting that bump up on the Lal Street, one would say. But with that, we're completely timed out, and we've had a quite interesting session there with our guests giving us a whole slew of stocks and sectors that you need to be watching out for. I'd like to remind our viewers to keep sending us their queries if they have any stock specific queries that they would like our guests to have them addressed. We'll be doing that on this show as well, so do keep them coming in on our live stream, and we'll try and take them up as and when we can. But for now, it's a wrap from all of us that put this show together. Thanks so much for tuning in.